Monday, March 24th. We are going to talk about a lot of things. There is a lot of green in the market. Is this the upturn? I've got several historical, just statistical datas that says that March has been a bad year, that April leads to rebounds. Maybe you want to think about it and the reason why you want to be in the market and not out of the market. We're going to talk about robotics because the CEO of Salesforce put out an amazing video. The dot bomb, there is a lot of talk about, hey, next quarter when all of the Mag 7s start drawing down some capital spending because of DeepSeek, because of other things, maybe we see a dip down in the stock market like the dot bomb because it's overvalued, blah, blah, blah. We'll talk about Stanley Drukenmiller, who is a legend, 30 years of 30% or more per year. We'll talk about Tesla. Tesla's a big one. We will talk about the top 10, top 20 gainers in the S&P year to date. And finally, a trading stock, a stock that's up like 40% in the last few days. I'm going to give it to you as one momentum pick that you could trade, but also tell me why it's not an investable stock. So we'll go into that. Now, Seeking Alpha, over the weekend, this is Alpha Picks 101 webinar replay transcript. It is a masterclass. It's a webinar. Okay, past performance is no guarantee of future results, blah, blah, blah. Alpha Picks has outperformed the S&P, showing a 135% increase since its inception in July 2022 compared to the S&P 500's 50% gain. This is how to maximize your membership in Alpha Picks. What is Alpha Picks? Okay, there are a couple of things. If you go to my link tree, the link is down below, linktr.ee/dailystockpick. You will see me use several tools in this video. First is Trendspider. It's a charting tool. Now, if you don't know anything about charting, go and get a free chart. Don't just sign up for Trendspider and say, oh my God, I'm going to understand all of the technicals. No, use a free chart for 6 to 8 months. Even though Trendspider has a great 2-week deal for $20, I'd still say you're better off. You're absolutely better off going and getting a free chart program like Thinkorswim, like Webull. And as we're in the market, as we're in this upward market, take some chances. Open up a Webull account. Get free shares. Again, it's on Linktree right here. Join Webull and get up to 75 free stocks. Do it, because start a small account. My account now, it was $13,000. Now it's $10,000, but I got down to about $8,000. It's all risky. Start a risky account. Use it as a sports betting. We're in March Madness. I use this instead of sports betting because I'm far better at stocks than I am sports betting. But for going back to Alpha Picks, it's this bundle. Okay, it's this bundle. And the bundle is in 2 sections. You get a Seeking Alpha Premium, which is normally $299. Okay, that gets you the quant. It gets you a bunch of other things that are included in that. You can research stocks. You can research ETFs. You can import your portfolio. It will rate your portfolio. You can read all of the technical analysis, all of the AI stuff that I do with AI analysis. You can look at here in Seeking Alpha. It is fantastic, okay? Then the second part is Alpha Picks. Alpha Picks is a data-driven portfolio that has beaten the S&P. You get 2 picks per month, one on the 1st and one on the 15th. You buy them 1% of your portfolio, and they tell you when to sell these stocks. And so this particular article just goes over why they picked the stocks, maybe some mistakes that they've made in the past with some stocks and why it was a mistake. But this is a fundamental stock picking portfolio that has worked, that has absolutely worked. And so in this down market, their picks are expected to outperform because they are fundamentally sound. And that's the deal with this. It's a fundamentally sound, this video and webinar, utilizing Alpha Picks is outperformed, blah, blah, blah. It's just a great, great portfolio. I have more than $100,000 into this portfolio. I am going to rebalance at the end of March, and I will do that probably in a video, but we'll see what happens. Now, as far as my personal stuff, I did a watch list, 12 stocks and sectors for the newsletter subscribers. Okay, it's at Daily. Again, Linktree. Just go to dailystockpick.substack.com. You can go to Linktree, linktr.ee, and you can look at all the newsletters. I post an education section. I post a paid section, but mostly during the week, these are absolutely free, 100% free. So there's no reason not to sign up for the newsletter. So again, I took you through. You can choose Webull. By the way, I got into Robinhood. I haven't been a fan of Robinhood at all. I'm going to probably take that down. I like Webull. Webull has been far better to me than Robinhood. But you got your Trendspider. And again, you have a 2-week trial. So if you've been playing around with charts for, a couple of years and you want to get a little bit, you want to take the training wheels off and go, balls deep into this, get a 2-week trial. Okay, it doesn't get you my 4-hour algorithm. We will go over my 4-hour algorithm. We will go over the 65-minute. We will go over trading algorithms. But this does not get you that. You have to sign up for a yearly plan in order to get that. I had a couple of people over the weekend say, screw it, I skipped the trial because it's so good. And we'll go over Tesla. We'll show you Tesla. But this watch list, 12 stocks and sectors that I think are ready to pop that you should have in your watch list. And I pointed out that there are 3 types of watch list: a must buy, a may buy, and watch these. Okay, this is the way I have mine set up. Make sure you're organized enough so that you have this set up. Because today, look at all this green. Look at all this green. Why did I put out this watch list now? Well, let's go over 3 particular statistics as to why you want to be in this market. Historically, okay, post-election seasonality. This is after an election, okay, after an election for the last 26 years. Look at March. Okay, it's not done bad, but you're heading into one of the best months of the year. April, July, and November are the best months of the year. If you had those odds in blackjack or any gaming, say you bet on sports and you had the odds that you were going to gain in these months, have at it. Have at it. And again, I'm just talking seasonality. I'm just talking statistics. What's another reason? Well, they say that markets always price in things ahead of time. Tariffs announced, okay? And then tariffs in effect. Was this drop already pricing in the tariffs? And now, as he comes off and says it's negotiable, I forget the exact word. I think it was an F word, but it's negotiable. Maybe it's already priced it in. Maybe. And if he doesn't implement it as forward as possible, maybe we start to see it. And maybe that's what the market's reacting to today. Okay, maybe we don't get, and you're seeing there's 2 reds in the core portfolio. That's Coke and that's Pepsi. Those have been big gainers. I mean, let's look at Pepsi. Pepsi during this time, when you look, the algorithm got you in February 19th during the market downturn. Okay, at 144, you're trading at 145 right now. You got all the way up to almost to 160 at that resistance level. Coke, we're trading close to 70. Algorithm got you out. Nice little 8% gain right there. This is the 4-hour algorithm. There were stocks that were winning during this time. So again, did it price it in? Now, the third reason you want to be in the market. All of these crashes bottomed in March, except the 2022 crash. The 2000 dot bomb, the 2008 housing crisis, the 2018 tariff war bottomed in March, and the 2020 COVID crash. 80% of recent crashes bottomed in March. That just means 4 or 5, 80%. I mean, it sounds like a huge number, but again, you play statistics. There is nobody that's going to win 100% of the time. You play statistics. You play statistics. Now, this is timing the market. Bad timing can take a bite out of returns. Value of $10,000 invested in the S&P. Invested all days? This is what, 20 years? 20 years to January 2003 to December 2022. Invested all day, $64,000. 7 of the 10 best days took place in bear markets. So it got you out. Missing the 10 best days. Okay? Missing the 20 best days. This is over 20 years. Missing 30 best days. This is what $10,000 does to you. This is why you want to be in the market. Okay, even during this downturn, it could feel bad, but you don't want to miss out on the good days. And FYI, today's a good day. Today's a good day. QQQ in pre-market, we're up 1.6%, almost 2%. Algorithm got you in at 478, you're at 481. Maybe it was a good one. But again, don't pull your money out of the market. Make sure you have a plan. My plan for VOO and QQQ is that I will take long-term capital gains while it's going down and then try and buy as it's starting to go up. And am I starting to buy? I told you at 478, didn't feel comfortable. I thought the tariff, the April, hold on one second. Stop. I'm hearing a dog crying. And it's because there's a blanket on the floor, I think. I was buying at 478. Didn't feel comfortable. Still doesn't feel comfortable to think I should be buying at 481. 487 is where it's trading today. But you've got to be in the market. Okay, stock index futures rise as Trump's new tariffs expected to be more targeted, meaning that where there will be fewer tariffs laid on. Go and read this article. Okay, if the Liberation Day announcement of April 2nd on reciprocal tariffs for levies and other barriers and nations, including U.S. allies, officials familiar with the matter told Bloomberg that new levels would be notable expansion of U.S. tariffs, and it has been shaping up to be more focused than widespread. That's the key. More focused than widespread. That will be a boost to the market. That will be a huge boost to the market. So let's talk about this week, because Catalyst Watch. Okay, you got this huge IPO of CoreWeave, Dollar Tree. And by the way, I listened to a podcast this weekend. I think it was the All In podcast, but they were talking about the Google, the Google buy of that cybersecurity firm and how big it is. It's effing huge. I am bigger on Google today after listening to that one. It's huge. But the Catalyst Watch, you got quantum computing and Sonova Energy have high levels of implied volatility. Of course. Hertz and Lemonade have an elevated level of short interest. The most overbought stocks per the 14-day relative strength index includes Servomed, Regencyl, Radius, stuff I would never buy. Notable companies to report during this week: KB Homes and Oklo, the nuclear. Okay, DoorDash, Williams Sonoma expand and officially join the S&P. DoorDash, you could buy, your DoorDash now on a effing payment plan. Tuesday, okay, that was Monday. This is all of the stocks that join the S&P and the ones that go out. Earnings watch on Tuesday, tomorrow. You got McCormick, which is the spice, Smithfield Foods. You got options trading implied a double-digit swing for Rumble and CorMedix following their reports. Trading on GameStop could be volatile as speculation that it may announce investment in cryptocurrencies. And then you've got several events. Okay, Wednesday, notable companies due to report: Cintas, Paychex, Dollar Tree, Chewy, and Jeffries. All day, Tableau will hold an investor day. Okay, Thursday, you've got earnings from Lulu, Braze, and Winnebago. CoreWeave is expected to start trading. This is the big one, CRWV. The company plans to raise as much as $2.7 billion. It is a huge, huge deal. NVIDIA is a backer in this one. This is said to be the start of perhaps AI IPO. Okay, and Dutch Brothers will hold its Investors Day. Dutch Brothers was up like 40% on their earnings. Huge. So, again, every day is planned out in this Catalyst Watch. It comes out every week from Seeking Alpha. It is part of what you get with this bundle, the premium and alpha picks, or you can get a free 7-day trial of Seeking Alpha. I like it. I like it a lot. Now, DeepSeek, we can talk about this. This is Mark Benioff. This is the CEO of Salesforce. I've been talking about robotics, and I've said that Tesla may be the best one to talk about robotics. Well, this is the CEO. I'm going to turn off the sound. This is the CEO of Salesforce, and this is a robot. Now, it's more expensive. This one could be a super, super cheap. He says robots that cost less than a MacBook, DeepSeek plus Unitree, the future of cheap. It's not science fiction anymore. The current price, though, they point out is $16,000. $16,000 for this. Now, I'm not saying that this is, right now, anybody's going to go out and buy a $16,000 thing that you can kick and it doesn't fall down. But that's how fast this market is turning. That's a huge opportunity. So here's what one of the things I was thinking about this weekend was about the 2000 dot bomb. And many of you may not have been through that or invested in it, but I was. I was a 30-year-old kid at 2000 who essentially I had a job. I was starting to build up. I was very risky. Okay. And I was thinking this weekend, boy, the Mag 7, if they start pulling back on some of their actual AI spending, like NVIDIA. Is NVIDIA the new Cisco? And other market leaders that where capital spending just slowed to a halt in Cisco. I mean, if you take a look at Cisco, there are other charts out there like Sun Microsystem that actually isn't even around anymore. I think Oracle bought them. But if you take a look at this quarterly chart and you take a look at this Cisco, okay, in Q1 2000, the high was 82. Okay, the low was 48. That's a 40% move in the first quarter of 2000. Did you have time to get out? Well, I remember a lot of articles that said this is the best time to buy Cisco. It wasn't, and it wasn't. You didn't have a good time to buy Cisco all the way until Q1 2013. That's 13 years. You could have traded it within this. And yes, it was highly volatile because they kept saying Cisco is bringing the internet back. Okay, is the AI boom, the dot-com bubble? The key difference that they bring up, Cisco was making money back then, but the valuation was significantly higher than Apple, Microsoft, NVIDIA, Google. It was significantly higher. Plus, these companies are making a tremendous amount more than Cisco was making back then. And when you look at NVIDIA in particular, Barron's this weekend posted an article that said NVIDIA is just disconnected from the opportunity after GTC. They are saying it is significantly undervalued. And this article goes over it. I believe it is undervalued. I haven't added to my position, but I will. Now, the 4-hour algorithm makes you 313%. Got you in at 116. You're trading at 120 today. I like to add as it gets confirmation. I should have added it. I didn't. I felt uncomfortable. This market is making people just think it's uncomfortable, but I continue to tell myself uncomfort is the time to buy, because here's the thing, that 116, I absolutely should have bought, and I'll probably buy more at 120. The algorithm wins 62% of the time. The average return is 8%, 8.77%. Your average win is 17.97%. So either this is an average return and you should get out, or we've just started this move up. And I would say NVIDIA for me is undervalued. And you just look at the quant has it as a hold and it has an F in valuation. Okay. Why does it have an F in valuation? Let's go and look. This was generated on 321. On it before 321. When you go and look at valuation, the valuation is notably higher with a price to book of 36, significantly above the sector. The stretch valuation suggests the stock might be overpriced compared to its peers. That is based on price to book. Now, when I go and look at the PEG ratio, if their projections are right, this PEG ratio is an A- at 0.79. Now, they haven't missed in quite a few quarters. So you look at that, they have beaten in the last 4 quarters. So year over year, they're expected to grow again. Yes, it's going to be hard for them to continue to grow if the hyperscalers pull back. But I go back to this. Experts seem to think that this one's undervalued. Now, let's talk about a legend. Stanley Drukenmiller is a name every investor should know. This is a great thread from Bourbon Capital. Stanley Drukenmiller made 30 years of an average of 30% annual returns with 0 down years. And that's including, I believe it was including the 2008, 2009 housing crash. So again, take a look at this. It's a great, great thread. Understand where he did it, how he did it. You know, this is a guy who just invested in Argentina by going on Perplexity and saying, give me the 5 funds that I can invest in. And immediately he was up like 30, 40%. So again, understand the legends, find out what they did right. And you can find all this out on Twitter. You don't need to pay for stuff. You know, again, international names dominate list of cheap stocks. We can go over this. You know what number 1 is? OppFi, top pick. I think it's the 10th pick of the 2025 top 10 stocks from Seeking Alpha. China, Opportune. Again, this list, Pilgrim's Pride, which is an alpha pick. This is the list of 20 stocks that are buy rated and have a grade of A- or better for valuation and momentum. Seeking Alpha's quant rating is derived from a computer model that selects the very bullish quant recommendations. Again, go to my newsletter and I'll post the link to this article. Now, if we look at the biggest movers of today, Riot Platforms. This is a Bitcoin miner. I think Bitcoin went nuts because Trump posted. I mean, is it all it takes that Trump posts about his Trump coin and it's up like 40%? If that's all it takes. But Riot is up 5% after the company signed a term sheet for the potential acquisition of Select Rhodium and Core. I don't know what the hell that means. I'm not investing in Riot. I'm investing in IBIT. And when I say investing, I am buying for the long term. Now, Tesla is one of the big movers among the Mag 7 as retail investors continue to pile in. Individual investors have been net buyers of Tesla for 13 consecutive sessions through last Thursday, injecting $8 billion into the stock, according to JP Morgan. The rally comes as U.S. stock futures on signs that the next round of tariffs under Donald Trump may be more moderate than expected. And take a look at Tesla. Okay? Tesla right now, 258. Where'd my algorithm get you in? 248. Did I buy? I said I was going to buy. I felt uncomfortable. I didn't. Now I'm paying the price because it's at 258. Over 13 sessions, people have piled into this name. Does the valuation matter? Not in this name. The valuation has never mattered in this name. Nothing. And revisions, nobody cares about it. Everybody's revising down. I will say, I am not buying into this one until after they do the March deliveries. I just don't expect March deliveries to pump this stock up. It's going to be hard. Okay, this one is just one that may be difficult to actually invest in. But the algorithm, okay, let's talk about that. Because if you're going to buy and hold, Over the last 2 years, you've made 34%. You may be perfectly happy with buy and hold at 34% over 2 years. But if you used my 4-hour algorithm to buy, you win 46% of the time. So it's a coin flip because there's 24 positions. Okay? Your average win, 16%. It knows when to get in. Past performance is not a guarantee of future performance, but this is technical trading. This is an algorithm. It takes emotions out of it. And when back tested, it performs. What do you make? 148%. It's on there on the screen down at the bottom. And how do you get the 4-hour algorithm? You sign up for a yearly subscription with Trendspider. You can try it out. If you want, during the trial, I'll send you a 65-minute algorithm that I wrote. You can try it out. I even, in my past newsletter, I put out a 1-hour algorithm for a stock trading battle that I did with Nader and James Ford. So again, sign up for this. If you're trading Tesla, you should absolutely have some type of technical strategy that is back tested and works. And my 4-hour algorithm works. You're up 4% today at $258. Okay. This algorithm got you in at $248. I should have bought. And there are many, many times when I say to myself, God, I should have bought this one. Is it too late now? Probably not. Am I going into this one? No, I just feel uncomfortable. You have to invest for yourself. Tesla's rolling out full self-driving software in China. So not only is Elon, I got some texts over the weekend from some Facebook groups that there has been some, let me address the Tesla kind of stuff and Elon Musk. He shouldn't have gotten himself into politics. I have been a long supporter. There are 125,000 Tesla employees in this country. Okay. In the US, if you're one of those people who wants to just, go and destroy a Tesla, try not to, because here's the thing. And I will tell you, A, you're on camera. B, I'm going to go buy a new Tesla. You are actually contributing to increasing the stock price. Because if you destroy my Tesla, I'm going to go and buy another Tesla. And a lot of people will. And when Tim Walz says he is rooting for Tesla, which is an employer in his state, which also his retirement fund is in Tesla, and many of the people F him. And Dean Phillips spoke out about it. I put it on my Twitter. Dean Phillips was the guy I would have voted for in a heartbeat in this election. He didn't get a chance to run, but that's the guy. And he's a Democrat. I probably am a Democrat. I voted both Republican and Democrat. I'm in the middle, but I do not, no matter what Elon is doing, I'm not going to vote for 125,000 people losing their job. It's the same thing. GM, during my grandmother was 12 years old, got in a car crash. We found out GM made a decision through corporates that they wanted to spend 50 cents on a bolt instead of 75 cents. Was I rooting at that point for GM to fail? Certainly was. Killed my grandmother. But then I realized as I'm older, good God, if GM goes down, this country goes down. Tesla is the most American-made car in this country. Do not go and destroy property of anybody else. And yes, Tesla destroying is the same thing as effing January 6th. Trump is a moron. Trump is an absolute moron for saying it's not. You destroyed property on January 6th. You threatened people on January 6th. It's the same damn thing. Don't do it. Do your protest peacefully. And don't destroy property. But again, 23andMe, bankrupt. And Supermicro, shares fell as they downgrade. That's it. But Tesla, I won't do. Now, if your portfolio is up this year to date, and you're based in the S&P 500, I would tell you that, hey, look at the long term, because the number one in the S&P, this is from StockTwits, is CVS. Number 2 is SMCI. Number 3 is Newmont Corporation, which I personally own. Okay, year-to-date return, that's up 27%. Philip Morris, which is the Zyn, thing. It's the Chulis tobacco. Philip Morris is up 25%. But let's just take CVS. Let's go and take a look at a long-term chart of CVS. Is this one that, this looks great. The algorithm loses you half of what buy and hold does. And God, I wish I would have gotten in at that 44 price. Algorithm had you in at 22%. Earnings came around and it gapped up. But let's look at a weekly chart of this one. Because does this look good? Maybe it's bouncing back up to 78, which is the 200-day. It could. It could. Typically, when this one goes on the weekly under its 200-day, it makes its way back. Maybe won't make its way back altogether. Right here, you can see the 200-day provided resistance on the weekly. This may be an opportunity. The algorithm does not trade well in this. It loses you 4.1%. It does better than buy and hold. But when you have a stock like this, you have to find a strategy to trade it. And some of these, like AT&T, I want to see that one. Because right now, the sentiment score is 85. Let's go look at AT&T. Is this one that you want to buy? Does the strategy work on AT&T? Well, buy and hold makes you 47% over the last 24 months. That's crazy to me. Because if we go back and look at a monthly chart of AT&T, this has been a nightmare of a stock. If you bought this back in September 2007 at $30, you're still not positive. If you bought this in August, say you got excited because the one you bought in 2007, all of a sudden you're even. September 2016 at $30, you're excited. I mean, if we just cross a line here at about $30, okay, we're going to go right there, $29.95. You're on sale. Look at it once, twice, 3 times. You haven't been able to hold above that. So where do I think this one's going? $29.95. It's on sale. So another one that has a high sentiment score, GILD. I got questioned about this one the other day, I think. GILD while I was on Facebook or YouTube Live. I don't know anything about medical stuff. I don't know anything, but it's got a high sentiment score. Algorithm just got you out with a 21% gain. Okay, algorithm makes you 18% over 2 years, 27 positions. Buy and hold makes you 34%. I don't know, but I will tell you, 18% with an average win of 6%, just getting out of a 21% gain. And this one could be coming up. It's a little bit stretched, but it's got a good sentiment score. And then you go over here to Seeking Alpha and you say, okay, GILD. What's the quant say? It's a strong buy. It's a strong buy. All of the categories are good on this one. Sentiment's good. Wall Street says it's worth 111, which is 3% upside. Have they chased it up? A little bit. But its 52-week range goes all the way up to 119. Do you want to buy at 107? Maybe. Might make sense. Healthcare is one of those defensive sectors. But if we're going into a growth market again, might not be one that you want to get into. So again, if you want to see the top S&P, go over here to the screener at FinViz, select an index, which is S&P, and then you can just go by change. And this will tell you the daily look at what's been working. Supermicro, Tesla, Palantir, Dollar Tree, Boeing. I took flack for saying that Boeing was coming back and that I thought it was a buy. And then all of a sudden they get a contract. The valuation's still a little stretched, but I do think that this one is it probably goes to 200. It's a $400 stock in a good market. But the algorithm got you in at 159. I said, I thought you could buy this one at about 163. It had confirmation. You're at 178 right now. I'm sorry, 182 in pre-market. 182. If you look at a weekly, this is just one that got down there. If we anchor this at COVID and you look once, twice, 3 times you've gotten down there, 4 times. And you've bounced back up to this 200 range every single time. Every single time the 200 range. So at 178, I think you're getting a 200. Now, the 4-hour algorithm has done great over 24 months. If this is in your wheelhouse and you've bought and held Boeing, you're down 12% from 2 years ago. Okay? But if you use the 4-hour algorithm, you had 32 positions, you've made 15%. Strategies matter. Understand, strategies matter. Now, I'm going to give you this stock. Okay? This is UPower. UCAR was up 10% on Friday. It's up 7% in pre-market. I want you to look at UCAR. And you tell me, what's a strategy you would use on this one? Would you buy it? Would you buy and hold? Go and research it. Use the tools that you have. You can go into FinViz. You can go into Seeking Alpha, but do research on it. Okay, because I will tell you, this is a momentum name that you could trade on Trendspider. Okay, 65 minute. Let's just go UCAR. Let's see if this one works. AR. Let's go and look at UCAR on the 65 minute. You know what? Over the last 8 months, you make 16%. Look, I didn't plan this. This is the first time I'm looking at this. You lose 68% if you bought and held. You've made 16% if you've traded the last 8 months on this, on a 65-minute algorithm. Okay? If you want to sign up through Trendspider for the 2-week trial and you want the 65-minute algorithm, just message me after you sign up. I get a text when people sign up. And if you just message me, go to Linktree right here. My email's up in the upper right. Just message me. Hey, I signed up for the 2-week trial. Send me the 65-minute algorithm. I'll send it to you. Then you can go and trade UCAR if you want. It's a momentum name. This one could be turning around. It could be. But I want you to understand the strategy behind it. I don't want you to just take emotion out and follow this. I want you to scroll down, look at the formula, and say, oh, is that one a good one that I should follow? Let's look at the 1-hour stock battle. Let's say battle. There we go. The 1-hour stock battle on UCAR. Let's look at that one. Loses you 14% versus 61% over the last 72 days. So it doesn't work. Doesn't work at all. So you don't want to follow this one. You want to find a strategy that works. We can look at, let's see, maybe a Boyle momentum strategy that I have in here. I don't share all of these, but this one, no, it doesn't work. Doesn't work. Let's see about the 50-day on the weekly. That's a weekly strategy. You ain't going to get that one. Let's see about this A+ setup. Let's see. Nah, nothing gets you in. There's no entries found in the last 7 days. So yeah, you want to find a strategy that works. Let's see. This is a Tesla strategy on the daily. Nah, doesn't get you in. But again, if you Tesla strategy on the daily, let's see. 14 months. Look at that. This is a Tesla strategy on the daily. Testing back for 14 months, you make 48%. Versus buy and hold is 0%. Doesn't have you in. So maybe it'll get you in. Again, my 4-hour algorithm has you in. Today, this one probably gets you in. So again, find strategy. All these strategies have been posted either on my newsletter or by Trendspider. But again, these are great strategies. If you have any questions, you can certainly hit me up. Linktree. All the socials are up here. Remember, Trendspider, Seeking Alpha Premium, the bundle, or you can get a free 7-day trial of Seeking Alpha Premium. And Alpha Picks, best portfolio out there. I think with this rebound that we probably are going to have, I think Alpha Picks outperforms. So pick the strong buys in there. Okay? And if you don't have Webull, take $1,000. Take $500. Okay? If you have a larger account, take some money, throw it into Webull, because I guarantee you it is the most fun you're going to have outside of sports betting. And since Robinhood allows sports betting now, I guarantee you Webull's getting into sports betting. I just don't like Robinhood. Honest to God, the interface to me is confusing as hell. I just don't like it, and it's probably because I like Webull that much. So if you have any questions, hit me up. Okay, take care. Hopefully today's good.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.